Greetings, traders, and welcome back to another In-Depth with Chris episode. In today's discussion, we'll be covering U.S. futures exchanges. So perhaps you were wondering a little bit more about the U.S. exchanges that exist, or you're in another country and you're curious how our exchanges may be different or perhaps more similar to your own than you might even realize. This is the type of information that may not intentionally help you pass the Gauntlet Mini, but nonetheless helps you stay well-rounded as a trader, and that is important. Keeps that brain growing. Without further ado, though, let's dive on into that material and learn a thing or two about those US-based exchanges. US futures exchanges have evolved from just being a loud, noisy, pit-based system to a more sophisticated trading platform. In the early days, they were just a marketplace where agricultural products changed hands. Today, their selections have become far more sophisticated, catering to various stakeholders' needs and wants. While the exchange marketplace itself has consolidated into only a few big players for the most part, there is really no shortage in competition between them. So we're going to dive into all the different exchange options that we have here inside the US, or at least the most popular options that currently exist at the time of this video. By definition, a futures exchange is a platform where traders can buy or sell futures contracts. These futures contracts can use several underlying assets, ranging from commodities to equity indices. By standardizing the futures contract, these exchanges promote ease of access and enhance a marketplace's liquidity. For more customized contracts, participants could choose to participate in the forward market, where it is possible to fine-tune the contracts to meet the trader's requirements. A forward market, however, does not have the same liquidity, as there is no intermediary to settle those contracts. Futures exchanges have better pricing information, and the daily settlement of trades and margin requirements ensures that the possibility of default on the expiry date is minimal. This added transparency is another advantage that futures exchanges bring to the table, because the default risk in a forward contract is just substantially higher. The settlement process in a futures exchange is comparatively simple. A trader can extend the contract on the expiry date itself by purchasing a new futures contract with an extended expiry date. Alternatively, there could be an offsetting position to take the same contract. An example of this would be to go short if the futures contract is currently being held long. In some instances, there is a physical delivery of the underlying exchange of the quoted price in all of the agreements, but this is very rare. Futures exchanges themselves are more often than not today a place for traders to speculate on the price instead of taking delivery. In the early days, U.S. futures exchanges offered contracts on agricultural goods, like we mentioned. The Chicago Board of Trade, otherwise known as the CBOT, was the first exchange in the U.S. that offered futures contracts on products like corn, wheat, and soybeans. This limited selection remained for a relatively long time. There were no significant developments in the futures market as far as the diversity in products, and this really stayed this way for quite some time until the 1970s. In the 1970s, the futures market in the US saw a significant development with the introduction of the CFTC, otherwise known as the Commodity Futures Trading Commission by real definition, but most of us just know it by CFTC. This was something that allowed for further regulation on what was going on in the market, and allowed for the trading of futures contracts on all 90 U.S. Treasury bills in the Chicago Mercantile Exchange itself. And by 1977, trade on futures contracts for long-term debt had also started in the CBOT. There were contracts on foreign currencies as well, and the scope of future trading was no longer limited to agricultural products. The U.S. futures market has the highest trading volume globally and is one of the most advanced markets in the world. It offers futures on a wide range of products like Bitcoins offered by the Chicago Mercantile Exchange and the Chicago Board Options Exchange, as well as various other choices that are just not offered anywhere else. In the early days, contracts were settled on the exchange floor, but today, electronic platforms such as our computers and the internet have made it far more convenient for us to be able to trade without actually being there and bumping into people and potentially catching COVID. The Chicago Mercantile Exchange Group, commonly known as the CME Group, is one of the leading derivatives marketplaces offering so many products. It comprises 4 exchanges, namely the Chicago Mercantile Exchange, which we know as the CME. Then there's the New York Mercantile Exchange, otherwise known as NYMEX. Then there's Chicago Board of Trade, otherwise known as CBOT. And then finally we have the Commodities Exchange, which is COMEX. Each of these exchanges within the CME Group offers futures on specific asset classes, as well as a wide range of products in general, and this has led to the CME Group being one of the largest exchanges when it comes to futures trading around the world. The exchanges within the CME Group have also been instrumental in developing electronic trading platforms, which has led to greater penetration of the derivatives market. Trading on the electronic platforms continues to dominate the pie, with Open Outcry controlling a very minor stake in today's overall trading volume. The CME was formed as an agricultural commodities exchange and is one of the oldest exchanges in the US. It merged with the NYMEX and the COMEX in 2008, and since then, the volume of trades has surged remarkably. Most of the trades take place through its online platform called CME Globex Trading System. The exchange offers futures on broadly 4 asset categories, namely interest rates, agriculture, forex, and equities. Some of the futures contracts offered here could include things like Australian dollar futures, or adjusted interest rate S&P 500 total return futures, or perhaps the 1-month euro dollar futures, or potentially block cheese futures if you're interested in trading that. The New York Mercantile Exchange became part of the CME Group in 2008, and it's primarily focused on energy products. While the asset classes may be limited to only energy and a few agricultural commodities, their selection within the energy future space is pretty exhaustive to look at. There's a ton of things here, and I strongly recommend, if you're interested in trading energy futures, that you definitely take a look at the New York Mercantile Exchange. It covers almost every asset in the energy space and offers a very wide range of flexibility when choosing from these assets. There's tons of options, and once again, it's entirely up to what you decide to trade, but if you're looking for energy futures, this might be the place to go. The Chicago Board of Trade merger into the CME Group has widened the parent exchange scope as far as derivatives trading is definitely concerned. It was one of the oldest exchanges to be established, which was back in the 1980s. The CBOT offers futures on wheat, corn, and soybean. It serves as a marketplace where farmers can and still hedge their produce if they need to. That's how it really got going, but since its inception, CBOT has expanded the futures market in the US exponentially and offers futures on a very wide range of products. And unlike the NYMEX, it's not focused on just a particular segment, so you'll find a very wide range of things here, including the energy sector, agriculture, equities, and even interest rates. The Intercontinental Exchange, otherwise known as ICE, was formed in 2000, and this was done with a vision to create a transparent and efficient OTC trading platform, otherwise known as over-the-counter, for energy products. That was their goal. It first entered the futures trading business by acquiring International Petroleum Exchange, which was IPE, back in 2001. ICE has always pursued a growth path by acquiring some other smaller exchanges, which has allowed them to continuously grow over time, and their portfolio is continuously expanding as well. So this is another one not nearly as popular as perhaps NYMEX or the CBOT, but another one that is worth being aware of to potentially check out if you're looking for more options to trade. In summary, the US futures market has come a tremendously long way in relatively a short period of time and continues to advance its options as well as even the number of exchanges that are offered here on a daily basis. There are other exchanges that you can find to trade at around the world, but the idea is at least be aware of the big dogs, at least here in the US. That way you have something to compare to if you're trading on an exchange outside the US, or if you're inside the US and you want to trade on something close to home and you want to know what the biggest ones are, well, now you do. But until next time, folks, thank you for joining me as always. If you haven't, please do me a favor and click that like and subscribe button down below so I can keep coming out with content for you guys. I wish you all the best of luck in your trading journeys, and I'll see you on the other side.